Mantra, or the OM token, has been one of the top performing cryptocurrencies in a market that's rather dull. The question is, will this rally continue and what's fueling all of this? Let's have a look at some on-chain metrics most people are not considering. Now, this is not the first video on Mantra on this channel. There was a fairly popular video published 1 year ago. At the time, the price was 61 cents. Now we are at $6.65, so more than a 10x. And so I tried to publish videos on various cryptocurrencies early on this channel when there's still quite a bit of upside potential and when the market cap isn't yet too large. If you don't want to miss those kind of videos, feel free to subscribe over here. Again, I publish videos regularly, once or twice per day. And so 2 more videos on Mantra followed. This video slightly outperformed after a while. The recent video is just going according to average. So it seems like the interest in the token over time is going down. Now, I always like to look at relative valuations. So I don't like to look at US dollar charts of various cryptocurrencies, because the problem is when Bitcoin is going up, then a lot of altcoins go up as well. And when Bitcoin is crashing, then very few altcoins survive. So in the end, what we want to know is, do we get more return versus the safest of the cryptocurrencies versus the benchmark by buying a certain altcoin? And that's why charts like this are very useful. We can see interesting turnaround points, and that's true for OM as well. Initially, Mantra underperformed Bitcoin by more than 90%, 92% to be more exact. But then in October of 2023, something happened. The bear market stopped and we suddenly got massive outperformance. What happened in October? What helped the price do more than 13,000% outperformance versus BTC over the course of 1.5 years? Of course, there's a general narrative that turned more and more bullish, as in the tokenization of real-world assets. So for example, when we've got stocks, that those stocks could afterwards also be purchased on chain. But there's something specifically that happened in October of 2023, and that is the flow of capital within crypto. What we've got over here is the stablecoin market cap. How many stablecoins are in crypto? Sometimes this is going up, sometimes this is going down. And since October of 2023, this tends to go up. This means that money is flowing from traditional finance into crypto. Because how do stablecoins get created on chain? How is this going up? It's not going up when people start swapping things. It's not happening from trading. It's happening from the conversion of fiat currency to stablecoins. So when you are sending your hard-earned fiat currency to, say, Binance, then Binance takes that fiat, sends it over to a custodian, for example, Tether. Tether then holds those tokens in custody, might make some additional return from this, maybe by buying government bonds, and it also creates the adequate amount of stablecoins on chain. So when money is flowing from fiat to crypto, this is going up. When money is flowing out of crypto and people redeem from the system, this is going down. Currently, this is going up, and again, it's increasing since October of 2023, and that was the same time when Mantra tended to start outperform Bitcoin. In other words, it seems like Mantra to a degree is a levered bet on crypto. When crypto as a whole is expanding, when people are believing in real-world asset adoption, then Mantra is doing very well, much better than BTC. Now, some people are worrying about this here, the tokenomics of Mantra, or how is the supply of OM developing over time. Because we are currently a bit under 1 billion OM tokens, and this will grow to more than 2 billion over time. But have a look at the time scale. This is happening over the course of 5 years. So yes, there is token inflation, but it's relatively small compared to the inherent volatility of the asset, right? Let's say there is really no additional demand for Mantra. Demand and supply is completely balanced, and now the supply doubles. We would then expect that the price of Mantra, at least relative to Bitcoin, should get cut in half. But what does that actually mean? On this chart, a 50% drop is not really that impressive. It's just a small blip in the grand scheme of things. And so let's then have a look at the holder dynamics. Who's actually buying here? What's causing this rally? Of course, there's the narrative, but the question is always, is retail buying here, or is it the whales, or the potentially even market manipulators, let's say market makers and centralized exchanges? We have to do a bit of work to answer that question, because OM is listed listed on a lot of blockchains. So we've got, of course, the Mantra blockchain itself, but what I find interesting is listing on other chains. So for example, BNB, Polygon, Base, and of course, Ethereum as well. And the holding is somewhat spread. So on Ethereum, we've got 37,000 holders. On Base, we've got 65,000. On the Binance Smart Chain, we've got 10,000. And on Polygon, we've got 7,700. And so here's what I always find interesting. I look at minimum holding thresholds. So how many retail investors are there? How many whale investors are there? In order to make this distinction, we just look at how many tokens at minimum should a wallet hold. So to be counted for the chart on the left, a wallet has to hold at least 200 OM tokens. So at the current price, that's a bit over $1,000. To be counted for the chart in the middle, it's $10,000 or 2,000 tokens. And for the chart on the right, it's another 10x in minimum holding, so $100,000 worth of the token. We can see how the whales bought very quickly in, then distributed, then accumulated again. Now they distribute again. And we can see how the buying by small retail happened much slower and how they also tended to sell much slower. But now they accumulated and again just recently distributing. Isn't it interesting how the number of holders is very different based on different holding thresholds? Now this is the Ethereum chain, and what I always find most interesting is actually the chart on the right, because the chart on the right is 100 times more important than the chart on the left, right? So when this here is going down by just one wallet, that's equal to this here going down by 100 wallets. So this is worth more than 30,000 retail wallets, and there's only 7,600 retail wallets in total. So the whales really make the price action. If we then look at the base chain, we can see that a lot of that whale money is not there. So it's directly on Ethereum. When we look at the Binance Smart Chain, very similar picture. When we look at Polygon, again, a very similar picture. So pretty much all of the buying and selling pressure that actually matters happens on Ethereum among the whale investors. And they are, interestingly enough, going down in numbers. What does that mean? How is it possible that the number of whales is going down while the price is going up? I believe there is a buyer of last resort. There's probably some centralized exchanges and some market makers that are creating this rally. The selling started in November of last year. So that was over here. The price did underperform Bitcoin by roughly 30% during that time. But now we see another rally. And here we don't see the buying pressure by retail or by the whales. So there seems to be short-term interest. It seems like at least in the last few weeks, the price rally was not natural. That's at least how I interpret the data, right? It seems pretty clear the number of holders is not going up. And at the same time, we see how most trading volume happens on Binance and on Gate.io, etc. It does not happen decentralized. And on top of that, we've got quite a bit of trading volume in the perpetual futures as well. So those are levered bets on the price. If you own a lot of the supply of a token and at the same time you offer bets on the token price, you've got a pretty strong money maker, right? It's like if you were to offer bets on a football game, but at the same time you bought the referee, you've got impact on the price, you can make money against the masses. And yes, of course, that manipulation can go on for a while, but the market cap is already at 6.5 billion. It's the largest player in the real world asset space, and it's only below Chainlink, and Chainlink is rather a data oracle provider, not so much known to be a real world asset bridging technology. But there are of course news that underpin a rally like this, right? For example, Coinbase is planning to offer its stock as a tokenized version on chain, and that's again supporting the real world asset narrative that Mantra might benefit from. But here's the thing, I'm not so sure if it does make sense to now try to find the needle in the haystack, the asset that might perform well. Because have a look at this, right? This is the performance in the last week. This is the performance in the last month. This is the performance in the last year. And yes, there are some tokens that make very nice performance, but the vast majority of tokens did not perform well, despite Bitcoin going up in the last year. In other words, if your portfolio is somewhat diversified and you don't just have 2 or 3 altcoins, but you've got, say, 10 alts, then you're very likely down. And so instead of trying to figure out what are going to be the few green bubbles in the future, we can do the exact opposite, right? We can bet on the red bubbles. We can bet on altcoins doing not so great. And I'm not saying that Mantra is the best asset to do this. Again, because there seems to be quite a bit of manipulation in the last weeks, and who knows how long this manipulation will last. Especially when a short position or when betting on falling prices on Mantra becomes popular, we might even see another short squeeze, and that will then create a lot of pain. I think it's better to bet on falling prices of assets that a lot of people are not looking at. So that is the cores of this world, or the SFPs, or the XCHs. Or over here, the BALs, right? Balancer. This is Balancer relative to Bitcoin, and we can make money when this chart continues to go down. I've actually shorted Balancer for a long time, since 2023. And in the span of the last year, the token underperformed BTC by 77%. And under very little volatility, right? Shorting something like this seems to be safer than shorting something like this, right? We can simply just bet on most assets doing worse than BTC. We don't have to pick the few winners. And so the strategy is not 100% straightforward, right? We have to figure out what kind of altcoins to bet on, what kind of altcoins have a lot of token inflation that will then potentially do worse. How can we bet on falling prices? How do we also manage the risk? Because this is what most people are afraid of. If I'm betting on falling prices and the thing is going up, I might lose everything, right? This is the saying that people that are not informed say. You want to go about this strategically with proper risk management, but then we can create quite consistent alpha. I mean, performance is relative, right? So this is my alpha versus BTC per month. So the monthly outperformance versus Bitcoin. Each dot represents a single month. So this is the last 3.5 years roughly. The dotted line is a 12-month moving average. On average, in the last 3.5 years, I made alpha of 1.9% per month. And I know this is not a 10x in a month that a lot of meme coin traders are promising. But on the other hand, the risk is also very, very different, right? There is zero leverage in this performance. And there's also pretty much no risk to lose it all, right? This is not lottery ticket gambling. This is proper long-term investing. And so if your crypto portfolio is above $5,000, if you're not just playing with a few $100s, but you're actually serious about investing, then feel free to check it out. It's currently $125 per month. Once you're above $5,000 or $6,000, you should be able to make your money back. Whatever you have above that, of course, it should then also make more money. But again, it's not just about being break even. I think it's mainly about learning the stuff. It's about not getting wrecked. It's about having a strategic approach. It's about long-term gaining against the market. That's where there are all those tutorial videos. So looking very much forward to seeing you in the next video. Feel free to subscribe over here. A like would be very much appreciated as well. It helps the channel grow. And of course, also looking forward to seeing you in premium. Cheers.